For a lot of traditional personal investing or advice, it's the 60-40 allocation, 60% stocks, 40% bonds. And a lot of people view that classical wisdom as dead. I'm not going to say that that's necessarily right or wrong. I think it just can serve you depending on what your goals are. But so to someone looking through that view, basically everything they own is a public and liquid security. That's, looking at a private placement to invest in real estate is a radically different alternative investment, right? And so here are some of the benefits that I just want to add on for investing in such an alternative. So number one, you are giving up liquidity. When you purchase a public bond or a public stock like the S&P 500 index, you are getting liquidity. You can sell it immediately. And with that, you're paying a premium. So you are basically getting a lower return baked into the deal in order to have that liquidity. It's called a liquidity premium. So if you want the liquidity, then it's probably worth paying for. But if you don't want the liquidity, then why pay for something you don't need? And so furthermore, liquidity may seem great on paper, but actually liquidity can be your worst enemy because humans are emotional. I'm emotional just like everyone else. And if you wake up and have a bad day, or if you're going through a rough time or something, you might be tempted to sell your public or liquid securities. And maybe stocks are down and then you're freaking out. And so you sell. So then, your emotions cause you to sell when the stocks are down, when everyone knows that you need to sell when it's high, right? But emotions,
Conceptually.
yeah, emotions can get in the way. And so I argue that actually illiquidity can be a big benefit because it protects you from yourself.